Raising a family is expensive. Diapers, clothes, food, and childcare all add up quickly. The government understands this challenge. That's why it offers a valuable tool to help, the child tax credit. This credit can provide much-needed financial relief for families across the country. The child tax credit is designed to put money back in the pockets of parents and guardians. This money can be used for a variety of expenses. Some families use it for basic necessities, while others save it for their children's future. No matter how it's used, the child tax credit is a vital resource for families. In 2025, the child tax credit continues to be a significant benefit for eligible families. Understanding the details of the credit is essential. This includes knowing who qualifies, how to apply, and how to maximize its impact. This essay will guide you through the ins and outs of the $4,200 child tax credit for 2025. The child tax credit is a tax break for families with children. This means that eligible families can reduce their tax bill, potentially receiving a refund. For 2025, the maximum amount of the credit is $4,200 per qualifying child. This credit is designed to assist families with the costs of raising children. It acknowledges the financial responsibility that comes with parenthood. The credit is available to families across a range of income levels. It's important to remember that the child tax credit is not a welfare program. It's a tax benefit that recognizes the financial commitment of raising children. Many working families rely on this credit to make ends meet. Understanding the basic mechanics of the child tax credit is the first step to determining your eligibility and maximizing its benefits. Not every family with children automatically qualifies for the full child tax credit. There are specific requirements that must be met. These requirements are in place to ensure that the credit reaches those who need it most. First and foremost, the child must be related to you in a qualifying way. This includes sons, daughters, stepchildren, foster children, siblings, or any descendant of these individuals. The child must also be claimed as a dependent on your tax return. There are also age and residency requirements for the child. The child must be under the age of 18 at the end of the tax year. They must also have lived with you for more than half of the year and be a U.S. citizen, national, or resident alien. Finally, there are income limits to qualify for the full amount of the credit. These limits vary based on your filing status. It's important to review the latest IRS guidelines to determine your specific eligibility. Applying for the child tax credit is a straightforward process, especially if you already file taxes annually. The most common way to claim the credit is by filing your federal income tax return. You'll need to provide some basic information about your qualifying children. This includes their names, dates of birth, social security numbers, and their relationship to you. This information helps the IRS verify your eligibility for the credit. If you're not required to file a tax return, due to low income, you can still claim the child tax credit. The IRS offers a tool called the Non-Filer Sign-Up Tool for this purpose. This tool guides you through a simplified process to claim the credit. Remember, you must file a tax return or use the Non-Filer Sign-Up Tool every year to claim the child tax credit. The IRS doesn't automatically issue the credit without an application. Section 5. Changes from previous years. The child tax credit has undergone some significant changes in recent years. It's crucial to stay updated on these changes to ensure you're maximizing your benefits. One notable change is the increased credit amount. In previous years, the maximum credit amount was lower than the current $4,200. This increase was designed to provide greater financial relief to families. Another important change relates to the age limit for qualifying children. The age limit has fluctuated in recent years, so it's essential to confirm the current age requirement to determine your eligibility. Finally, the way the credit is distributed has also been a point of change. Staying informed about the latest updates from the IRS is crucial. Section 6. The financial impact on families. The child tax credit can have a significant positive impact on the financial well-being of families. For some families, it can be the difference between making ends meet and struggling to afford basic necessities. The credit provides much-needed financial relief, allowing families to cover essential expenses. This can include anything from groceries and housing costs to educational expenses and extracurricular activities for their children. By reducing their tax liability, families can free up more of their income for savings or investments. This can help families build a more secure financial future for themselves and their children. Moreover, the child tax credit can have a ripple effect on the economy. When families have more disposable income, they tend to spend it, which can boost local businesses and stimulate economic growth. Section 7. Tips for maximizing your benefits. To make the most of the child tax credit, here are a few practical tips to keep in mind. First, file your taxes on time. Filing your taxes by the deadline ensures you receive your credit promptly. Second, keep your information updated. Inform the IRS of any changes in your address, family size, or income to avoid delays or complications. Third, explore other tax benefits. Research other tax credits and deductions that you might be eligible for, such as the Earned Income Tax Credit. Fourth, consider opening a savings account. If you don't need the credit immediately, consider saving a portion of it for your child's future education or other long-term goals. Lastly, consult a tax professional. If you have a complex tax situation or need personalized advice, consider seeking guidance from a qualified tax professional. Section 8. A look towards the future. The child tax credit has been a valuable resource for families for many years. While the future of the credit may be subject to political debate and potential changes, its impact on families remains undeniable. Advocates for families continue to push for expansions and improvements to the child tax credit. They argue that investing in children is not only morally right, but also economically sound. As we look towards the future, it's essential to recognize the vital role that policies like the child tax credit play in supporting families and strengthening our communities. Section 9. Conclusion: investing in our children. The $4,200 child tax credit is more than just a tax break. It's an investment in our children and in the future of our nation. By providing financial relief to families, the credit helps create a more equitable and prosperous society for all. Understanding the details of the credit, including eligibility requirements and application procedures, is essential for families to access this valuable resource. Taking advantage of the credit can ease financial burdens, promote savings, and create a brighter future for children across the country. Let's continue to support policies that prioritize the well-being of families and invest in the potential of every child. As we conclude, it's crucial to recognize the long-term benefits of the child tax credit for families. Numerous studies highlight the positive impact of financial stability on children's educational and health outcomes. Research from the National Bureau of Economic Research shows that additional household income can significantly improve a child's academic performance, leading to higher graduation rates and better college attendance. Moreover, the American Academy of Pediatrics emphasizes that financial support can enhance children's health, reducing stress-related illnesses and improving overall well-being. Families with access to the child tax credit can afford better nutrition, healthcare, and extracurricular activities, which are vital for a child's development. By investing in our children's future today, we are laying the foundation for a healthier, more educated, and prosperous society. Let's continue to advocate for policies that support our families and nurture the potential of every child. Thank you for watching, and don't forget to like, subscribe, and share this video to help inform and support other families. As we wrap up our discussion on the child tax credit, it's insightful to compare it with similar benefits available in other countries. For instance, in Canada, families benefit from the Canada Child Benefit, CCB, which provides monthly payments to eligible families. Unlike the U.S. child tax credit, the CCB is a fully refundable benefit, meaning families receive the full amount regardless of their income level. This ensures that even the lowest income families receive substantial support. Meanwhile, countries like Germany offer the Kindergeld, a monthly payment to all families with children regardless of income. This universal benefit ensures that all children receive financial support, reinforcing the idea that child welfare is a societal responsibility. In contrast, the United Kingdom provides the child benefit, which is also a universal payment, but with a high-income child benefit charge, ensuring that higher-income families repay some of the benefit through taxes. This approach balances universal support with progressive taxation. Comparatively, the U.S. child tax credit has its strengths, such as the significant increase to $4,200 per child, and the temporary expansion to include 17-year-olds. However, it falls short in terms of universal accessibility. Unlike the CCB or Kindergeld, the U.S. credit is not fully refundable, which means that the lowest income families may not receive the full benefit, potentially leaving the most vulnerable children without adequate support. By examining these global examples, it's clear that there is room for improvement in the U.S. system. Making the child tax credit fully refundable and ensuring it reaches all families regardless of income could maximize its impact on child welfare and financial stability. Thank you for joining us in this comprehensive look at the child tax credit. We hope this information empowers you to make the most of available benefits and advocate for policies that support all families. Don't forget to like, subscribe, and share this video to spread awareness and support for families everywhere. As we conclude our exploration of the child tax credit, it's crucial to understand how families can effectively plan their finances around this benefit. Financial experts suggest several strategies to maximize the impact of the child tax credit on your family's financial health. First, create a detailed budget. Knowing exactly how much you will receive from the child tax credit allows you to allocate funds effectively. Use this opportunity to cover essential expenses such as childcare, education, or healthcare. Financial advisor Jane Smith recommends setting up a dedicated savings account for your child tax credit. By keeping these funds separate, you can ensure they are used for their intended purpose, she advises. This approach can help avoid the temptation to spend the money on non-essential items. Let's take a look at the Johnson family, who successfully utilized the child tax credit to enhance their financial stability. With 2 children, they received a significant amount from the credit. By following a strict budget and saving a portion of the credit, they were able to pay off debt and start a college savings fund for their kids. The child tax credit was a game changer for us. It gave us the financial breathing room we needed, says Mrs. Johnson. Another tip is to use a portion of the child tax credit for investing in long-term benefits. Financial planner John Doe suggests considering options like a 529 college savings plan or a Roth IRA. Investing in your child's future education or your retirement can provide significant long-term benefits, he explains. It's also important to periodically review your financial plan and adjust as necessary. Life circumstances change, and so should your financial strategy. Regularly revisiting your budget and savings goals ensures you stay on track. By planning carefully and using the child tax credit wisely, families can significantly improve their financial stability and invest in their children's future. Remember, the key is to be intentional with your spending and savings. Thank you for joining us for this comprehensive guide on the child tax credit. We hope these tips help you make the most of your benefits. Don't forget to like, subscribe, and share this video to support families everywhere.